We are in the midst of earnings season, and let's pull up the stock of Talwalkars and show you what that counter is doing. It's down 1% or so. It came out with its third quarter earnings, and to talk to us about the earnings, we're joined by Mr. Anant Gawande, CFO at Talwalkars Better Value Fitness. Thank you so much for talking to us on NDTV Profit. Your third quarter revenues are up 28% and profit after tax is up 20%, which is quite impressive for a seasonally slow quarter. What worked for you?
Good afternoon, Nisha, and Happy New Year to your viewers. Actually, what happened is this quarter, Diwali came in middle of the quarter. Usually, Diwali comes either in the first part of that quarter, which is October, which is what it is in the current year, or it comes to the latter part of November, which does not allow us to do any schemes. So we had already evolved a strategy for a short-term scheme for 1.5 months, in which we packaged the gym scheme along with diet plans or spa plans. This also meant that there was a differentiated product in place. People were willing to pay a little more for it, because when you bundle a product, you get a little more value out of it. And that helped us to derive more sales in value terms than what we could do in the year before last year.
Your EBITDA has jumped 44% from a year ago. How did you achieve this?
Anisha, just to give you example of the way the cost move, all the incentives are paid for the August scheme, or they are paid at the year end, which is in the March bonus schemes. So in the month of October, November, December, generally salary costs and all other costs are extremely subdued. We kept them under tight control. Obviously, the head office costs also remain under control. Actually, if the depreciation provision, which we have almost doubled up over last year, had not increased, even the PAT would have gone up by probably 25 to 30%.
What were your same store sales like last quarter?
Last year, same time, we had done about 4.5%. This time was slightly better. It was about 7.5%. As I said, because we were able to bundle up other products into this differentiated product, we were able to deliver same-store sales growth, which was more than what would have been expected in a weak quarter like October, November, December. So it was about 7.5%.
Okay, and how many new centers did you add in the third quarter?
We added 2, which means for the year we have added about 50. Usually October, November, December is not a quarter where we add centers, because the centers come right in the middle of the festive season. Last quarter when we had a significant amount of centers, a lot of work is going on in those centers, and we expect to open a reasonable amount of centers between the middle of February and the middle of May, in the next 90 days, I would say.
Right, so what does this expansion plan do for your margins in the quarters ahead? Won't they become less predictable and become more volatile?
No, actually our margins on an annualized basis have moved up by between 150 and 180 basis points over the last 4 or 5 years. We were at about 38% about 4 years back. We are at about 44% just now. So we are inched up slowly and surely. Each quarter has its own vagaries, which is why the margins look up and down. But I think on an annualized basis, if you ask me, our effort will be to introduce value-added products. Using those value-added products and increase margins by between 150 and 200 basis points going ahead. Control costs. So I think on an annualized basis, there has been a steady increase in margin.
What's your FY14 revenue growth guidance, and will you meet your target?
Anisha, we have been guiding from the beginning of the year that we should grow around between 22 and 25% at level. We do not usually guide at top line level, which is the revenue level, because we believe that bottom line is what matters for the company. I think looking at the first 9 months results, these sound achievable. January was a good month. We were able to derive a little more to the same store sales than what we were doing earlier. So I think we should stay on track for that guidance and be able to achieve it.
So in this last quarter of the financial year, what are you expecting?
We have done about 24% PAT growth for the 9 months. So we should try to do between 22 and 26% PAT growth the last quarter too, so that we are in line with what we have targeted to do. I think we should be in line to do what we are saying right now.
All right, Mr. Gawande, thank you so much for talking to us
Thank
on
you, Anisha.
NDTV Profit and sharing with us details of the earnings posted by Talwalkars Better Value Fitness in third quarter. We slip into a break now. We'll be back with lots more. Stay with us.